welcome to Trailblazers. Today I'm here with Narek from Hylo Protocol. Narek, can you kind of start off talking about what you're working on at Hylo and kind of give an overview of the protocol?
Yeah, sure. And thanks for having me, Jack. So Hylo pretty much is a new generation decentralized stablecoin on Solana. Our vision as a company is to essentially redefine what stablecoins mean on this chain, because right now you pretty much have like centralized issuer dominance, USDC, Tether, and then a long tail of kind of bridged assets and a couple alternatives. And so what we're trying to do is create a bulge in that long tail with Hylo by essentially having like inflation resistant decentralized money that can be leveraged all over the place in DeFi, as a utility, as a store of value, and as a liquidity medium, pretty much. I can get a little bit into the mechanism design of Hylo too, if that's of interest. The the core problem, or I guess with like these kind of decentralized stablecoins, is the fact that you're using volatile collateral to back the stable, right? Like compared to what the centralized issuers do, where they have like a T-bill in the back. The value of that T-bill in on dollar basis doesn't really fluctuate. It just kind of gains interest as the government pays back the bond. In our case, we're backed by SOL LSTs. So SOL, notoriously very volatile asset. You need to hedge out that volatility somehow. And the kind of main approach that we've seen with this is Athena on Ethereum, where they essentially have a perpetual short in a bunch of different venues against the ETH that's underlying the Athena stablecoin. And with Hylo, just given that we're on Solana, we determined that it might be best to try to self-contain the hedging mechanism rather than depend on tying together a multiple of perp venues, because we wanted to stay fully on chain. We're not trying to use the centralized exchanges as part of our infra. So we decided to essentially invert the basis trade, and the mechanism behind Hylo is kind of this self-balancing pool of two tokens, where one is a stable coin and one is this floating leverage token that we call XSOL. And so that's a token that provides the holder 2 to 4x variable leverage on SOL with no liquidation and no ongoing costs. So as an XSOL holder, you're kind of like a liquidity provider to the high USD kind of stablecoin peg, but also any excess returns that's generated by the collateral behind the stablecoin all goes to you as the liquidity provider.
Okay. Yeah, it totally makes sense. So, like, I guess decentralized stablecoins aren't something that are necessarily like new to crypto. They've been around for like a while, and like the original like maker design is like having ETH back DAI. But your mechanism is different by using like the XSOL as another asset. How does that kind of I guess increase the capital efficiency or kind of change the protocol from something like Maker's traditional way of doing it?
Yeah, I mean, so it's not that far off, right? Like the only difference is that in the CDP collateralized deposition style stablecoin, the excess collateral value, like in dollars, is unused, and so that's where the capital efficiency kind of drag comes in, where you have like, you've deposited $1.50 to get $1.50 out of stable, but that extra 50 cents is doing no work for you. Maybe it's generating yield, like if it's an LST, that's probably the case. But what we decided to do is essentially tokenize that additional collateral. So by creating a second token against the same vault that backs the stable, you're able to have every single Lamport of collateral being used for something. That's where we improve capital efficiency, by tokenizing the excess.
Okay, that makes sense. And can you talk a little bit about how the mechanism works to like say the price of SOL is dropping? Like how do you guys kind of make sure that the collateral is enough to equal the stable coins outstanding?
Yeah. So it's there's many layers to this, and I think XSOL is the beginning of this. So as an XSOL kind of LP, when you buy it and you hold it, what you're doing is you're giving up your collateral to the system. And if the price of SOL starts going downward, right? You
Mhm.
are absorbing leverage downside. As an XSOL holder, it's the vice versa of, when SOL is going up, the stablecoin holders only maintain their dollar position. You're increasing your value by 2, 3x beta pretty much. Um, and so on the downside, the XSOL holder is kind of the first line of defense to defend the peg. And then beyond that, we have a few other mechanisms like we have variable fees, depending on which kind of mode of collateral ratio we're in. The fees can go up and down depending on what we want users to do to try to protect the peg. And then finally, we have these what's known as the stability pool, which is the kind of risk. It's the last layer of risk management before like our treasury would intervene. And the stability pool is pretty much where the stablecoin HYUSD holders come to stake to earn yield off of the protocol. And so the risk reward trade off for earning that yield is that they are exposed to a impermanent swap from HYUSD to XSOL in some small amount whenever market conditions determine that that's necessary for us to boost the CR back up to keep protecting the peg. So like with the stability pool factored in, I think right now with like almost 97% stake, we have like a 6,000 CR ratio or something. It's like some insane number. But as the stable coin gets distributed among the ecosystem and used for other things, that percentage shrinks and that boosted CR goes down, but it's always a lot higher than like the core 150% that we're trying to keep.
Okay, so there's like kind of three tranches of risk in the system, and it's like if you're holding the unstaked coin, then you're like kind of at the like safest kind of level of risk. Is how
Yeah,
you
yeah,
think about
because
it.
we're trying to protect that dollar value that you're holding, right? This is kind of that's the prime citizen that we're trying to like keep alive at all times.
Okay. And so when thinking about like the XSOL position, like can you kind of describe like why somebody would want to take this position and how it differs from like a 3x leveraged perp position long SOL?
Yeah, I think that the difference is, and of course, there's trade-offs with every like decision that you make in trading, right? The core difference is that you can't get bucked off of the trade. So I've been holding an XSOL position since we launched, and I haven't cashed it out, right? And so I like saw like, super high PL when Sol pumped, and then Sol has been dumping the last few days since last week, right? And
Mhm.
I'm not really worried about liquidation because I know that like, all right, this is a temporary correction. We'll come back, and I don't have to really do much to maintain the trade besides maybe buy more. And so I guess that's the thing. You trade off a little bit of like I guess the predictability in the exact amount of leverage that you get because this is kind of it's floating within a range that the protocol controls. Where with a
Mhm.
perp, you can exactly specify how much you're taking out and have a really, really tightly controlled leverage. But as soon as the price swings against you in a perp market, a liquidator bot is showing up to take your lunch and get you out of the trade to protect essentially the pool of depositors that back the decks, right? And so that's the trade off. But I would say that yeah, it's for lazy people that have a long bullish view and want to like not do a whole lot to manage their trade.
Okay, yeah, that makes sense. So if you have like a medium or longer term view, but you don't really have confidence in your like specific execution, maybe this is like a token that you'd want to pick up to kind of get that view.
Yeah, and you don't want to pay fees either. We don't have a funding rate. Like pretty much by giving up your Jito Soul, like and the yield for that, you're essentially paying an implicit funding rate, but like we don't charge you. So your P&L looks a lot larger when you exit the XSOL position with the same kind of pump compared to doing this with Pro.
Okay, yeah, totally makes sense. And so kind of let's say that these tokens are get a bunch of adoption, there's like a ton of stable coins outstanding. Do you kind of see like other natural assets as like or like natural ways to create derivatives on assets that is kind of in your headspace because this is kind of it's an area that's been experimented with, but I don't there hasn't been like a ton of huge like kind of things here. So like what are you guys kind of thinking in this area?
Yeah, I think one interesting one is Bitcoin for us, and we're eyeballing the market like on which of these kind of alternative wrapped Bitcoin assets start taking off. Um, but I think, yeah, Bitcoin would be an interesting one, and potentially any other, even like LRTs, where you're dealing with kind of the SPM layer 2 or like sidechain ecosystem, and anything that essentially derives a natural yield from a proof of stake network we're interested in. And then Bitcoin would be a little bit slightly off of that path, but just how well it's performed this year compared to alts, I think is makes it a great candidate to back a stablecoin. And so we would want to try to get that involved as well, because the kind of long-term speculative view on Bitcoin is even stronger than Sol, I would say. So like bringing in some open interest for Bitcoin into Hylo would be exciting.
And then if you did something like that, you'd have the same stable coin. You just have like a diversified like kind of collateral basket.
Yeah, exactly. Exactly. Diversifying what's backing the stable at the end of the day. And what BTC would bring to the table is like a little bit more collateral kind of value stability, right? Where it doesn't swing as hard as Sol does.
Okay, yeah, that makes sense. And how do you see your tokens kind of like right now they're small and they don't have a ton of liquidity, so they're not like used as collateral or whatnot. But kind of how do you see these initial three tokens kind of being used in DeFi?
Yeah, absolutely. I would say I guess if we started with just the stablecoin, the most like straightforward is liquidity pairs, right? So providing alternative liquidity for Sol, Jito Sol, and also direct liquidity to other stables, so like high USD USDC pair. That's kind of like the vanilla like easy use case. Where it gets a little bit more fun is setting up lending pools for high USD, and then allowing users with staked high USD to use that as collateral to borrow more. And so we can enable these kind of leverage loops on the staked high USD APY, which has been double digits since we launched. So that's an exciting one. And then staked high USD as a kind of yield split on the kind of pendle trade style startups on Solana. Though that would be another kind of avenue in terms of like DeFi adoption. And I would think longer term, we want to try to get into like proper like store of value for users. So like backing, let's say, a credit card, or backing like a DeFi savings account with network stake. This is kind of a little bit farther in the horizon, but something that we're also looking at.
Very cool. What are some challenges you guys have kind of faced along the way of building your protocol, or maybe are still facing now?
Yeah, I think the biggest kind of cold start thing that we faced is just educating users on XSOL, because we need the XSOL holder to spin the flywheel, pretty much, right? So in the same way that like limited liquidity in an external trading venue where you need to short and you need a sized short to be able to reap a funding rate, um, affects like the basis trade style stablecoin. It's the same for us, but we need to attract the open interest as long interest in XSOL, pretty much. And so I think that's like maybe one of the core go to market issues that we've had, and a lot of it. I think we have some ideas of how to kind of solve this and get people interested, but I think education is the first stop, and then probably getting a little bit more degen on the level of leverage you can take out, and also like smoothing out the curve at which the XSOL leverage pays off. I think those are two other areas that we're looking at to improve this.
Do you think that it's mostly going to be like a retail product, or do you think there's kind of a way where larger players might want to hold like, I don't know, big stocks of like XSOL to maybe hedge, or I don't know, maybe the opposite of hedge, or do some more complex strategies?
Yeah, yeah. I think we're starting out with retail just because this is the most kind of it's one of the best ways to test your product out, get feedback from a bunch of different angles, and a diverse base of users. But I think eventually there would be a target on kind of large SOL bag holders, like validator companies or some of these treasury plays that are popping up, where effectively by trading away staked SOL to us for the stable, you're kind of hedging out some of your exposure to generate yield. Um, and giving up some of the volatility. So yeah, there's kind of an institutional angle as well, but what we found is that it's a lot easier to start with solo users and build up and kind of go from there.
Yeah, that totally makes sense. Kind of get more of a grassroots use case before you're just like pulling in a ton of liquidity from like one person.
Yeah,
Um,
we want decentralization in that sense.
yeah. So, kind of, what are your plans for the future? Kind of, what are other than kind of trying to get more demand for XSOL? What other things are you guys thinking about at Hylo?
Yeah, I think there's a few kind of expansion areas. Like you touched on some of these, like onboarding new assets. I think is a big one. Um, we're probably going to look at launching our own LST and validator setup soon. Um, DeFi integrations. That's like kind of the really the next biggest thing for us. Just getting tapped into all these different venues in Solana DeFi. Um, and then beyond that, it's just kind of like building up TVL, educating users, getting products into people's hands, showing them what our products are able to do. That's kind of the short term horizon for us.
Exciting. Kind of as a DeFi founder, I think that you have kind of a unique perspective, kind of, I guess, on the blockchain itself, the landscape, and kind of what's going on. Is there anything that has become kind of intuitive to you, but you feel like it's not really intuitive to people who are not like in your position?
I mean, do you mean like as a user of DeFi or as somebody specifically building?
Like as a builder?
Yeah, I mean, it's something that wasn't super clear to me coming in that I found out just being a founder here is how willing people are to help and how deep your network can get in a very short amount of time just by showing up to conferences and talking to people. Um, the community in Solana DeFi is fairly close knit and not huge, right? Compared to like the vast sea of kind of Ethereum and other ecosystems. So I think that's just been an amazing kind of help for us trying to get off the ground as an early stage DeFi startup, like just how available other founders are and how willing they are to help. In terms of like kind of strategy and whatnot as a builder, I guess the other kind of piece is, just making things as permissionless and accessible as possible because interoperability is kind of the name of the game with this. To build, I feel like a successful DeFi product, you need to be able to integrate and provide value in kind of a mutual way to any integrator that wants to be involved. And so that's kind of another thing that's like maybe not obvious from the outside, like that your design decisions and kind of how you build your programs impact how well you're able to integrate with other folks. So like building a brand new kind of primitive, like you learn a few of these things. Like, oh wait, like we're like challenging some assumptions with like how AMMs are supposed to work. Because Hylo at the end of the day is kind of a market maker, right? And so
Mm-hmm.
designing it in a way that fits into like the common interface that people expect is something that's not apparent from the outside. You just have to like do it to find out.
Yeah. Yeah, I've definitely experienced how kind of welcoming the community is and how if you kind of show your face and really try to provide value, people will really kind of help you out and are kind of looking for ways to help you out. Kind of talking about you, how did you initially get into crypto? Like what was your kind of crypto pill moment?
I would say, I mean, very early, like 2012 or 13, I bought Bitcoin after hearing about it in college. Like as everybody read that like copy pasta about the dark web and started learning about the Silk Road and all that stuff. So I bought Bitcoin at some point early, but then, didn't really pay attention much as the smart contract thing took off, like in 2015, right? I kind of was too deep in data science AI world in Silicon Valley. But what finally crypto pilled me proper was doing a thesis in my graduate program on Web3. We just got a great advisor, and that was like a Web3 guy, and we ended up building this protocol for people to like monetize their medical records. It was just kind of like an early DeFi use case. And looking into all that, like, building a little bit on Ethereum, thinking about the kind of the core principles of Web3, the data ownership, that was inspiring, and that's where the actual pilling happened. It was just kind of interacting with like early DeFi stuff and learning how to build like a decentralized app. That's where I got converted over.
Very cool. Okay. Other than kind of your work at Hylo, what things in the crypto industry kind of have you excited, like looking into the future? What things kind of like give you some sort of spark that you're maybe not directly working on?
Yeah, I mean, I think the recent kind of narrative swing toward bringing real world assets on chain is exciting, and as like a DeFi person, you should be a little bit wary of bringing in these kind of centralized money managers, etc. Um, into the ecosystem. But at the end of the day, like tokenization is tokenization, and of course, there's going to be some kind of trust gap that you have to deal with. But I think those are particularly interesting just because of the democratization aspect, like opening up capital to investment opportunities that have not existed before for normal people, right? Like these private credit and slightly more like down the risk curve TradFi things. Being able to get a piece of that as a normal investor is exciting, and it's like only crypto can enable this. So it's that I think that's pretty cool, and I think generally the growth of Solana DeFi, the explosion in usable stable coins and new kind of ways of generating yield on chain are things that I'm always excited about and following, and also just consumer stuff. Credit cards that pay themselves, I think, is an exciting new narrative too. That's like only possible by the fastest blockchain with like a great DeFi ecosystem. So that's also another one.
Yeah, I think it's really cool that like kind of the more basic stuff that was promised is really starting to work and like isn't being like clunky anymore.
Yeah,
So I think this was
yeah,
yeah. I think this is a great way to wrap things up. Thank you for coming on and sharing your thoughts and kind of what you're working on.
yeah. Thanks for having me, Jack.